Hello dear ladies and gentlemen, welcome to NSBroker, and it is weekly market overview with Richard Bridges. First of all, this week I would like to talk about American dollar. American dollar is a top world reserve currency and just major currency in the world, and world economy significantly depends upon price for American dollar. And as we can see in different news sources that American dollar was strengthening, was turning higher during past few days. And that happened exactly after a period of time when dollar was relatively cheap, when dollar was going down, and it is partially related to the recent appointment that was made by Joe Biden administration. Just recently, Joe Biden appointed Jerome Powell as a Federal Reserve chairman. Federal Reserve, that is American authority that basically issue American dollars, print dollars, and price for American dollar significantly depends upon monetary policy of Federal Reserve. And as we can see that Federal Reserve is now performing different stimulus for American economy and for American dollars, and some news sources like Washington Post, for example, or Wall Street journals are very critical about current situation. And for example, here they write that Federal Reserve is overdoing this stimulus for American economy, that it is financing future debt problems, but currently high price for American dollar is beneficial for American economy. And for example, if we compare charts, we can see on the example of chart for euro dollar that before dollar was relatively cheap and euro was strong in comparison to US dollar, and now situation is changing, and euro is going down in comparison to American dollar. And the same we can see on the example of British pound. Even though British pound is strong currency, but here we can see also this change, and that price for British pound dropped down in comparison to US dollar. And also the same situation we can see on the price of gold. Just before price for gold was dropping down, was unprecedentedly going down until the low point of $1,722 for 1 ounce of gold, and that is really low price for the gold. Even if we can just move this chart, we can see that previously, just around 1 month ago, it was around $2,000 per ounce, and during summertime in August, gold reached 9-year maximum, and just recently, end of February, last week of February, price for the gold was going down significantly, and now it is started to go up again slightly. And this change happened also because of the weak American dollar, and now it is strengthening a bit. And there is direct relation between gold price and dollar price, because gold price is always attached to the price of American dollar. And the same we can see on the example of American stock indexes. For example, we can see how volatile was Nasdaq index, and now after being at very high point, it is slightly gradually going down as well. And there is always direct correlation between price for American dollar and price for American stock indexes like Dow Jones, Nasdaq, S&P 500, and the same direct correlation between gold price and American dollar price. And when dollar is strong, American indexes are going down and gold is going down, and vice versa. When American dollar is cheap, American indexes are going up and gold is going up, because first of all there is direct correlation between price, and also when dollar is cheap, more investors are paying attention to gold, as they consider gold to be more reliable and more conservative asset for investments, and they pay attention to American stock indexes as well. And obviously, now traders can use this opportunity for doing trades, for getting potential benefits from the current market situation and from current monetary policy of American Federal Reserve. And even though many news sources, many analysts are sure that in future it might cause some problems for American economy, this new stimulus from Biden administration. But anyway, every trader can use current situation and current opportunity. And thank you for joining me today. It was Richard Bridges with Weekly Market Overview. Thank you.